Jai Swaminarayan to all of you. Uh, as usual, let us begin by invoking the blessings of the Gurus. Dhyana Moolam Gurur Murti, Puja Moolam Gurur Padam, Mantra Moolam Gurur Vakyam, Moksha Moolam Gurur Kripa. Om Shri Guruve Namah. Before we start, there is something that I would want to share with all of you. First of all, I am very grateful to the WIRC for once again inviting me to come and speak to you at this prestigious DTRC. I think speaking at this venue itself is a very big honor and a privilege because this is a holy place. And to have the blessings of the Almighty when you speak here, I think is something that, not everybody gets by way of an opportunity. So thank you very much again, all of you, for coming in such large numbers to listen to me. Uh, Thankful to Ketan Bhai, thankful to Jinal and to Pinky Ji. Pinky Ji especially for introducing me in such kind words. So let us, the beauty with technology always is that sometimes, it is like, it always gives away when most needed. So anyway, but now thankfully we have the technology up again. So if we were to look at the law and practice of reassessment, really the way I would see it is that first let us deal with the law. Then we will deal with the practice in terms of how courts have actually looked at some of the burning issues as far as reassessment are concerned. At the last, we will also look at what are the search provisions now, very briefly, if we have time. I'm saying, if we have time, I put them in the PPT will be with you. So you can actually use it for your reference. And at the end, there's just one slide to touch upon what is it that the income tax bill contains by way of changes to the reassessment provisions, which is not very much, but some of it is quite important. So if we were to look at how reassessment has progressed, I would put the development of the law on reassessment into three phases. One phase being the era up to 2021, right, where the law was substantially amended and we were governed by what is called an expression called reason to believe. And reassessment could happen only and only if the assessing officer had reason to believe that income had escaped assessment. This expression, reason to believe, was the subject matter of many decisions, subject matter of heated debate before the courts. And we had more or less a way in which this expression was interpreted. The courts were also becoming consistent in terms of how this expression was interpreted. Then came the era from 2021 to 2024, where Section 148A was introduced and the procedure was completely changed. We're all aware that, again, how the reassessment was to be dealt with pre-2021 was enshrined in the decision of GK and Drive Shafts of the Supreme Court, right? 256 ITR, where the Supreme Court laid down a particular procedure saying that you must first file a return. The assessing officer then has to look at the return, give you the reasons for reopening the assessment. You had a right to object to those reasons, and then your objections had to be dealt with and disposed of by the assessing officer by way of a speaking order. That is what the Supreme Court held in GK and Drive Shafts. Supreme Court also held that this process of completing a reassessment was more or less sacrosanct. And therefore, if the assessing officer deviated from that process, then the reassessment itself could be quashed, right? So the Supreme Court, therefore, laid down very clearly that this process is absolutely, absolutely sacrosanct and nobody can deviate from it. Now, this caused a lot of consternation as far as the department was concerned, because we are all aware that in India, we are not very compliant as far as procedure is concerned, whether it is on the SSC side or whether it is on the department side. So there were always some or the other shortcomings in terms of that procedure. And this expression, reason to believe, which was more than a reason to suspect, caused a lot of consternation, because the officers were required to do a certain bit of homework. They were required to conduct a certain level of inquiry, and then and only then, if they had certain concrete information, were they permitted to reopen. And there was a lot of litigation on what was reason to believe. And the courts had, and the department also had, in my view, more or less accepted. But all of this was overturned in 2021. In 2021, what the memorandum explaining the finance bill 21 said, that the intention of the parliament to introduce the reassessment provisions was, number one, because due to the advancement of technology and the information that the department collected from various sources, particularly Section 285BA and the Statement of Financial Transactions. So there was a lot of information that flew in from external sources, which the department could use to reopen. And also, other enforcement agencies started cooperating with the department. So today we know that the GST and the income tax department more or less function on a real-time basis as far as sharing of information is concerned. 2 years back, we had a session on what was called bogus billing, right? Where I had the opportunity to again come and speak before all of you. If you would remember the insurance context in that session, the GST picked up certain payments which the insurance companies made to aggregators, and immediately thereafter shared that information with the income tax department, with a result that the aggregators or the intermediaries got searched. And consequent to that search, insurance companies were issued summons and their assessments were reopened, right? And also, now what is happening is that that data is loaded onto Project Insight, and the agents' assessments are also getting reopened. So from that perspective, there's a lot of real-time information sharing, and therefore department thought that this information that is being shared should also form the basis of reopening, and therefore they revamped the entire thing. Now, one more complication that happened at that point in time was COVID-19 hit us. And there were certain actions under a lot of laws that the government had to take in March 2020 and also in March 2021, which unfortunately could not get done because of the pandemic. And therefore, there was what is called a Taxation and Other Laws Amendment Act, called TOLA, right? Where relaxation was given. It's also called the Relaxation Act. We'll refer to it as TOLA. TOLA extended the time limit. And what happened was that any notice that was to be issued before 31st March 2021 could not be issued. And TOLA gave an extension of time up to 30th June 2021 to issue those notices. But in the meantime, Finance Act 2021 amended the provisions as far as reassessment was concerned. So, challenge before the taxpayers became as to what is the right way. Should the notices be issued? Because not only did the law as far as reassessment change, and we'll see what changed in the law, but the entire procedure also changed. And when the procedure changed, right, then, unfortunately, the way of issuing the notices, the sanctions, all of that changed. So the notices that were issued in accordance with the old regime, the old procedure, the old way. But taxpayers contended that the old provisions stood repealed from 1/4/2021, and therefore, what had to be governing the process of reassessment for any notice issued after 1/4/2021 would be the new process. And therefore, taxpayers said that this was the new process that had to be followed and not the old process. So this matter went up to the Supreme Court. As we all know, 90,000 odd notices were issued, 9,000 odd writ petitions were pending before various high courts. Some high courts took a view that the notices were bad in law. Then came the much debated decision of Ashish Agarwal, where the Supreme Court took a view that, look, the revenue cannot be left remediless. And therefore, whatever those 90,000 notices were issued are now deemed to be issued under the new regime. Certain relaxations were given as far as the new regime was concerned. The requirement of conducting inquiry was done away with. But basically, there was extended time given. And of course, in Divya Capital, one private limited, which is 445 ITR 436, they said that the new reassessment scheme is enacted with the intent to reduce litigation and to promote the ease of doing business. But at the same time, the Delhi High Court also noted that this progressive as well as futuristic scheme of reassessment, whose intent is laudatory, unfortunately has not only been rendered nugatory, but also had an unintended opposite result. So everything got messed up. And after that, again, what was the challenge was, okay, then what was the time limit? And then when the time limit had come into question, Supreme Court delivered the decision of Rajiv Bansal, and we'll deal with Rajiv Bansal in a little bit. But then further relaxation was given, saying that TOLA ultimately will extend the time limit. And because the matters were sub judice, there was a certain surviving period within which the notices that could have been issued were held to be valid. Now, therefore, let's look at what these three eras actually say. So I have made three columns in this PPT. The first column represents the earlier position, right? Which is category 1, old regime up to 2021. The second column represents provisions from 2021 to 2024. Finance Number 2 Act 2024. And the third is what is prevalent today, which is provisions which are amended by the Finance Act 24, Number 2 Act 24, and the Finance Act 2025. So we have these three columns to look at. Now, as we mentioned, first let us look at what was the law as far as pre-2021 was concerned. As far as pre-2021 was concerned, what ruled the roost was an expression called reason to believe, right? And the law said that if income chargeable to tax has escaped from any assessment year, and the officer has reason to believe so, then he may not only assess or reassess the income, but also any other income which was chargeable to tax, which has escaped assessment and which comes to his notice subsequently in the course of proceedings. And there was a 4-year time limit and there was a 6-year time limit. 4-year time limit to reopen could be in any circumstance. 6 years time limit, the extension of 2 more years happened when the assessee would not submit something, and something comes to the notice of the assessing officer during the course of the reassessment proceeding. So if there was a failure on part of the assessee to submit certain information, then the 6-year time limit kicked in. And to that ruled the roost for quite some time. Then, of course, first proviso, which said time limit. Second proviso, he could assess income other than the income involving subject matter, but not income which was the subject matter of any appeal or revision. Explanation one: production of books or evidence which could be discovered with due diligence was not necessarily amount to disclosure. So if you just produce books of account but did not actually specifically disclosed income, then obviously that would never be regarded as a full and true disclosure. There were certain cases which still rule the roost where there is income which is deemed to be concealed. For example, you have income above the taxable limit, but you don't file a return, or certain such situations. Explanation 3, AO can reassess income which comes to his notice subsequently during the proceedings, notwithstanding the fact that it does not form part of the recorded reasons. So the powers were pretty much wide. We'll not spend too much time on what happened to the pre-2021 situation, because we're not really, there are some cases which are still pending. Unfortunately, we still have CIT appeals for the old years, which are still pending. And I can only tell you that the department is also concerned about these old appeals, because the department is actually doing a training on capacity building. And next Saturday, that is 1 week from today, I have to speak on the pre-2021 law before the commissioner appeals. So from that perspective, department is still very concerned about old cases which are pending. Hopefully, after this capacity building exercise is over, we'll see some more traction in the CIT appeals. I don't know whether we will or not, but hope is always eternal. Now, post 2021, we went into an era where the expression reason to believe was substituted by an expression called information which suggests that income has escaped assessment, right? Which was there in explanation 1 to section 148. Now, what is the difference between a reason to believe and an information which suggests that income has escaped assessment? Obviously, the difference is that there has to be a belief which was formed in the pre-2021 era. So that belief had to be based on certain evidence. That evidence had to be analyzed, and a proper reasoned view had to be formed by the assessing officer, which also formed the part of what GK and Drive Shafts told us, right? That he must dispose of an assessee's objection by way of a speaking order. So there had to be a higher onus. After 2021, in my view, the onus became slightly lower, but only slightly, because it says information which suggests. But what does the information suggest? That income had indeed escaped assessment. So at least there had to be a prima facie understanding from the assessing officer that the income did indeed escape assessment, right? Therefore, the onus was still there, admittedly a little lower, but it was not that he could just have, for example, if you see what is the information, and take the most important one, audit objection. The moment there is an audit objection, does not automatically mean that an assessing officer can start to reopen. They do it in practice, we know. But the point is that they cannot do the reopening just on the basis of audit objection. They have to analyze what the objection is. And we have certain case law in the PPT at a later point where, supposing we had disclosed something, the SSC had disclosed something, yet there was an audit objection. That audit objection cannot automatically lead to a reassessment. That was the most important thing, that courts have held that, look, the assessee has already disclosed everything. Just because there is an audit objection and you have information does not mean that you have to just reopen. You have to analyze, you have to form a view as to whether indeed there is some income that is escaping assessment. So the onus is a little lower, but it doesn't automatically mean that the moment there's information, somebody can reopen your assessment. Okay. Again, what is information is, as I said, any information received from a foreign jurisdiction, information received under 135A. This is the scheme where other government agencies can share information and the assessing officer can reopen on that basis. Of course, explanation 2 said that where an AO is deemed to have information, search under 132, requisition under 132A, survey under 133A other than TDS survey. So if these were the situations, there was deemed to be information available. But again, the onus was that had to be there. Now, what changed from 22 to 24 and now? The whole procedure which was enshrined in 148A has now become enshrined in more or less the explanations or subsections into 148. So what was 148A? 148A said, step 1, if the assessing officer has this information, he has to first conduct an inquiry with approval of the specified authority. And approval is very important because many cases are there where the approval was not taken from the correct authority and the courts have held to be, the assessment to be invalid. So this procedure again under 148A is very sacrosanct and it has to be followed to the T. So no deviation, mind you. Step 2, there has to be a show cause notice under section 148A clause B, where the assessing officer has to give you a notice asking you to show cause why reassessment should not be done. And that reassessment, that show cause notice has to have the basis of what information the assessing officer has. Third, you file a response to that. He has to consider your response and then decide if your case is fit for reopening by passing an order with the approval of prior authority under section 151. Again, he has to take an approval not only for conducting the inquiry, but also for passing of your order under 148 AD. You get the order under 148 AD, and then within 3 months, you are supposed to, you'll get a notice, within 1 month, you'll get a notice under 148, and within 3 months, you're supposed to file a return and the process will go on. So what was enshrined in GKN, more or less, by the Supreme Court, actually found its place in the law to say that, look, the assessing officer must follow. And all of this was again becoming very cumbersome for the officers. So what they did is that in the new provision, they omitted the whole making of the inquiry part. So the moment the assessing officer has the information, he will issue you a show cause notice. Again, does that mean that he has to not conduct any inquiry? The answer is no. If he does want to conduct an inquiry, he must conduct the inquiry. But if he does not want to conduct the inquiry, at least he must have good reason to believe that, not reason to believe, but at least information which suggests, let's use that term, because that is what is there in law. He has to have information which suggests that income is escaping assessment. And that suggestion is not something that comes out from somebody's mind. That suggestion is something that comes out from the records itself, right? So the onus is not completely as if the officer can do what he wants. he has to have a certain belief, and that belief has to be based on certain this thing. And therefore, then there are certain cosmetic changes where 148AB now has made, found its place into 148 subsection 1 and 2. And C and D have now gone into subsection 148A 3. So, more or less, the process has not drastically or dramatically changed, right? Approval is important. We'll talk about approval. Approval has to happen with the authority for mentioned under 151. Whenever you get a notice of reopening, please ask for the approval. And please see whether that approval has been properly given. We'll deal with some case laws in terms of what happens with the wrong approval and what happens with an approval without application of mind. Because we have limited time, I'm not getting into too many of these things. Again, 148A is not to be followed in case of search and seizure, and of course in 135A cases, as we know. So this is more or less the broad overview of the procedure that has happened. Now, important thing we spoke about was the sanction. The sanction obviously has to be, we spoke about the return to be filed in 3 months. So more or less, this is the procedure as far as the reassessment today stands. Obviously, again, I've done a comparison of section by section. We're not getting into too much of these things, only the time limits. Time limits in the pre-2021 regime were 4 years and 6 years. In the post-2021 regime up to 2024, they were 3 years and 10 years if the income escaping assessment was 50 lakh rupees or more, right? So if the income escaping assessment exceeded 50 lakh rupees, then the 3-year became 10-year. Of course, for, in the pre-2021 era, if you were a resident and you had foreign assets outside India, then you had a 16-year time limit. This 16-year time limit then got subsumed into the 3-year stroke 10-year time limit. Now, what is the time limit? The time limit is 3 years and 5 years and 3 months. Okay. So that's the time limit. Today, there can be no reopening after 5 years and 3 months. And I think this is something which is very salutary in terms of the reduction of litigation, at least, because otherwise, it becomes a huge challenge. Coming to really, yeah. So there was, of course, a first proviso laid down to Section 149, when what they said was that if you could not open a assessment under the old regime, when the regime changed with effect from 1/4/2021, if you could not open an assessment under the old regime, you could not open it under the new regime. And that was the basis of what was argued in Ashish Agarwal, saying that my time was over. Even in Rajiv Bansal, this argument was raised to say that when my time limit is over, can you really, invoke TOLA to extend my time limit? Because the old law is gone. That had only a time limit of 6 years. Now that 6 years are over. Just because you have TOLA, but TOLA applies only to the old law. Old law is no longer there. You have a new law. New law only says 3 years. So therefore, can you really reopen? And this is what was the controversy before the Supreme Court. So really, I think we've dealt with all of this. Let me not kind of, I have just put in the situations as far as the reassessment is concerned. Now coming to who has to approve? And I think that is very important. Who has to approve your notices? So if you saw, right, In the old regime prior to 2021, your beyond 4 years notice had to be issued with the prior approval of the principal CCIT, CCIT, principal CIT or CIT. In 2021 up to 2024, right, there the approval had to be taken from principal CCIT or principal DGIT. And we have many situations where in this period, the approval of the CIT has been taken. So please make sure when you get a reassessment notice, or even when you have still some reassessment notices which are subject matter of appeals, just see who has actually made or given the approval, because that's very important. And of course, there was a proviso which was introduced that the 3 years was to be computed after taking into account the period of limitation is excluded by the third to fourth, fifth proviso is extended by sixth proviso. That's fine. Now, what they have done today, they realized that the approval from PCIT or this thing sometimes takes a lot of time. So what they have done is they have now said that my approval for any notice after 3 years has to be taken by or has to be given by additional joint, right, or joint DIT. So, the level of seniority of the officer that gives the approval has been reduced. And they have reduced it consciously. Obviously, of course, it does lead to a question as to whether, somebody is applying their mind or not. Because the experience today of additional CITs and joint CITs is frankly not what it was. Because they don't come up the ranks anymore. But anyway, that is what it is now. This is the law, right? And therefore, the approval now has to be taken by the CIT. Of course, if the approval is taken by somebody more senior, what happens, right? If the approval is taken by somebody more senior, then in my view, again, the procedure has not been strictly followed, but courts have taken divergent views. Now, period of limitation, obviously, is 12 months to complete a reassessment, 24 months if the matter is referred to a transpricing officer or referred to other jurisdiction, etc. Right? Can the tax authority reassess different incomes? The answer to that is yes in all the three regimes. Right? Is a taxpayer required to furnish a return now within 3 months, earlier 1 month, now 3 months with respect to all this thing, or it can be extended further by the basis of an application made. I have not seen any extension being granted. People generally file within 3 months. Whether recording of reasons is required? No, now, because 148A-B notice and your 148-1 notice will now have the reasons anyway in the show cause. So therefore, no separate recording of reasons is required. So again, Finance Act 22 has also introduced a section 148B, which says that no officer below the rank of Joint Commissioner shall pass an order without the prior approval of additional DIT, additional JDIT, JCIT, JDIT, where the search or survey requisition is invoked. So even when there is a search or survey, there has to be a specific approval. So this is more or less in a very short capsule what is the law and what are the procedures for completion of reassessment. Let us now go into what is our practice. And let us first go to certain judicial developments. First, in this, we will go to the road to Rajiv Bansal. What actually happened, right? And what did Rajiv Bansal say? Because I think that is important for us to understand. Now, before we go to Rajiv Bansal, we also will have to deal with Ashish Agarwal in a manner, right? Facts in that case were that the reassessment notice was issued on or after 1/4/2021 under the erstwhile sections 148 to 151 by relying on the explanation in the notifications which extended the time limit as far as and which then were issued under the TOLA. Okay. These reassessment notices, of course, were subject to several writ petitions. And as I had mentioned, the High Courts actually quashed these notices, saying that these notices are issued under the old regime after 1421. As of 1421, the old regime stood repealed. And therefore, those were not, that regime did not exist on the statute. It was replaced by your new section 147 to 151, which under which, if you wanted, you should have issued the notices. Tola did extend, but the procedure had to be the procedure under the new regime, not the old regime. That was what High Court held, right? And therefore, the High Courts should have said that, okay, this is what the situation is would be. But the matter traveled all the way up to the Supreme Court. Before the Supreme Court, the learned ASG basically made a very impassioned plea. He said that, look, there are 90,000 such notices. It has a revenue impact of some thousands of crores. And therefore, revenue cannot be left remediless. COVID is something which happened once in everybody's lifetime. Nobody knew how to deal with it. And therefore, we were helpless. Please grant us some relief. So the High Court looked at it and said, all right, we will invoke Section 142 of the Constitution, which happens very, very rarely. It's again, debatable as to whether the High Court should have invoked, not invoked. We're not getting into it. It's now done, dusted, and the power under 142 were invoked. And they said that, look, all these notices, which are 90,000 in number, they will be deemed to be issued under the new regime, right? They will not be deemed to be issued under the old regime. So any notice that was issued after 1/4/2021 up to 30th June 2021 were to be issued under the old regime. The power to make the inquiry or the requirement to make the inquiry was dispensed with, and the assessees were given 2 weeks time to respond. The assessing officer was given 30 days, and the assessing officer was given, the assessee was given 2 weeks time to respond. So the procedure was laid down. Now, this decision, in a way, was landmark because everybody thought all these notices would go, get quashed. But then there came another ray of litigation, which we will deal with. But after this decision in Ashish Agarwal, right, notices were issued under the amended procedure following the direction, saying now you issue a fresh notice under the new one. So new notices were issued. And then what led to this thing was, okay, you have issued these notices under the new regime. But what happens to the older years, assessment years 13, 14, 14, 15, 15, 16? Those were already time barred by virtue of the proviso, which said that if there was something which was time barred under the old regime, you could never revive that under the new regime. So therefore, assessee said that, look, for the assessment years 13, 14, 14, 15, 15, 16, the reassessment notices could never have been issued. And therefore, this led to another thing. There were some decisions in favor of the assessee. There were some decisions in favor of the revenue, which are listed here. Now, the revenue then filed a specially petition before the Supreme Court. Supreme Court in Rajiv Bansal dated 3rd October 24, besides, of course, deciding the main contention, also commented on certain issues with regard to sanction, etc. And we'll see what the Supreme Court then decided in Rajiv Bansal's case. So the important thing that the Supreme Court said is that there is TOLA. You can't disregard TOLA at all. So the Income Tax Act has to be read along with the substituted provisions after 1st April 21. 13(1) of TOLA overrides the time limit mentioned in 149 of the Income Tax Act and hence relaxes the time limit for issue of the notices under 148. So you can't ignore TOLA. TOLA will give you an extension of time. And therefore, how does this interplay? TOLA will extend the time limit for grant of sanction by the authority specified under 151. The test to determine whether TOLA will apply is this, that if the time limit of 3 years from an end of the assessment year falls between 20th March 2020, which is when the lockdown actually started, right? The complete lockdown started from 24th of March, but the lockdown had more or less started from 20th March 2020. So if this time fell between 20th March 2020 and 31st March 2021, then the specified authority has time till 30th June 2021 to extend the time. And therefore, you could issue the notice till 31st March 2021. You could also grant the approval till 30th March 2021. Under the old regime, if the time limit for 4 years from the end of the assessment year falls between 20th March and 31st March, then the specified authority under 151(2) has extended time till 31st March to grant the approval. And it introduced what is called the concept of a surviving time limit. Now, what is a surviving time limit? It's very simple. If there is something where you file as a challenge to a particular order, you're aware that the time between which you file the writ petition and the order that comes from a court, that period has to be excluded while demanding or determining the limitation period. So anything that you litigate, that time is excluded from the limitation period. The same concept was brought in by the Supreme Court in this surviving time limit. So they said that the time during which the show cause notices were deemed to be stayed is from the date of issuance of the deemed notice between 1st April 21 and 30th June 21 till the supply of relevant information and material by the assessing officer to the assessee in terms of directions issued by Supreme Court in Ashish Agarwal, and the period of 2 weeks allowed by the assessees to respond to the show cause notice. And of course, the assessing officers were required to issue the reassessment notice under 148 of the new regime within this surviving time limit under the Income Tax Act read with TOLA. Any notices after this surviving time limit will not be considered to be valid notices. So let's kind of see let's see what was the surviving time limit by way of some numerical examples. Now look at a situation where, say, a reopening notice is issued under the old regime on 15th May 2021, right? The date on which the information which was provided to the assessee was 1/6/2022. And therefore, assessee had time of 2 weeks. So by 15/6/2022, the assessee would have to file the response. Now, there's a new notice of 148 that was issued. Say that was issued on 30th June 2022. What you got was an extension of 47 days from 1st of April till 15th June 2022, right? To issue the notice from the date on which this was filed. So if you issued the notice which was there on 1st of August 2022, that would be valid. So you had to basically add the time from the date of issue of the notice till the response was filed, right, by the assessee from 1/4/2021. You have to start on 1/4/2021 and then see by which time the notice was issued and the response was filed, that time had to be excluded. That's the surviving time limit. This is important because when we look at different scenarios, and I have put down some 3-4 different scenarios here in the slide, that this will be important as far as the determination of validity of a reopening notice is concerned. Because if your notice is not issued within this surviving time limit, which is the case in the second and the fourth row, then those notices are deemed to be invalid. Which were the years impacted by that judgment of Rajiv Bansal? Because revenue brought about this survival time limit, and they said that, look, reassessment notice for 16-17 and 17-18, which 3-year limitation for 50 lakhs and below, and 13-14 and 14-15, where the 6-year limitation was complete, that became valid as far as this is concerned. For 15-16, the revenue itself conceded before the Supreme Court that we are not pressing any, we will not press on any matter for 15-16. And today, there are 2 more Supreme Court decisions which follow. And there are a host of tribunal decisions, at least Bombay is accepting that as far as 15-16 is concerned, notices cannot be issued. Similar view was, of course, taken as I was given in, Mahesh Financial's Pushpak Realities so far, and so on and so forth. So 15-16, no reassessment possible. 13-14, 14-15, 16-17 and 17-18. We have to look at this surviving period theory. If the notice is issued within this surviving period, then the notice is deemed to be valid, not otherwise. Now we come to some judicial precedent after Rajiv Bansal, because it's important, what happened. So in this Ram Balram build home, right, the Delhi High Court actually quashed the notice, holding to be said to be beyond the period of limitation, here thereby setting the consequent order, right? Because there was revenue had period of 29 days limitation left. So surviving period was 29 days. On the date of commencement of the reassessment proceedings, that is 1st June 21, to issue a notice under 148, which is required to be accompanied by an order under 148 AD. Within the said 29 days, notwithstanding the time stipulated, which expired on 12th June 2022. So the revenue contended that the AO is required to pass an order under 148 AD by the end of the month following the month in which the reply to the notice of 148 AB was received. Thus, 148 AD was within time. Supreme Court said nothing doing. We have to follow Rajiv Bansal to the T, and therefore Delhi High Court said, sorry, not Supreme Court, Delhi High Court said that this notice is invalid. Now, one noteworthy judgment in the Madras High Court, there the facts were that the SSC was issued a 148 notice on 31st March for 15-16. Pursuant to Ashish Agarwal, the notice was treated as a notice issued under 148AB. Subsequently, of course, a fresh notice under 148 was issued. SSC filed a writ saying that already, Rajiv Bansal is there for 15-16, nothing can be done. What Madras High Court held is that this notice was issued within 5 years from the end of the year 15-16, but before the expiry of period under 157 on 31st March 22, as it stood on 31st March 2021. Therefore, the impugned 148 notice dated 31/3/2021 was timed, because the extension of time that TOLA gives is from 1/4/2021, not on 31/3/2021. So therefore, as far as a notice that is issued on 31st March 2021, that notice is valid. And therefore, the Madras High Court has reopened it. Not sure whether this represents the correct position in law, but any notice issued on 31st March 2021, one will have to deal with this Madras High Court decision. Now, taking decisions on jurisdiction, because it is very important in terms of who has to issue your 148 notice. And this now we really are entering from the domain of the law into the domain of practice of reassessment. So the first thing one has to look at when one looks at the reassessment notices is it issued by the officer who has proper jurisdiction over the assessee's case or not. And if you see this Nimit Mehta's decision, right, the assessing officer, uh, he was a non-resident individual, Nimit Mehta. And he was issued a notice not by international taxation, but by a local, jurisdiction. So he was always filing his returns by way of declaring his status as non-resident. But he was never assessed to tax in international tax and nobody bothered. So Bombay High Court said that, look, you are filing a return in the status of a non-resident. That we cannot dispute. But the fact that the international tax officer would be your assessing officer who had jurisdiction over you also cannot be disputed. The further point is that the assessing officer has also admitted that he has no jurisdiction over the assessee, but he issued the notice because this is one practical difficulty. The PAN lies with this assessing officer. So if the PAN lies with me, time was expiring, I have issued the notice. He said, what wrong have I done? Bombay High Court said, no. This is not what you do. You had to transfer the case. You had not transferred it. And therefore, this thing. He also said that, I never knew this person was a non-resident. But then what did you do? You never looked at the return of this non-resident at all. He's saying that I came to know that this assessee was a non-resident Indian only when he filed the reply. So Bombay High Court said nothing doing. All of this is not the case. Shortage of time was not satisfactory, saying that this notice is invalid. So jurisdiction is very important. And we've had situations where, particularly if we have foreign trusts who come and register themselves as foreign institutional investors here, right? The moment the word trust is seen, what happens is the PAN gets allocated to exemptions. So if there's a name trust, right, in your name, then automatically CPC allocates the PAN to exemptions. So you have to be careful. You have to actually get your PAN transferred to the correct assessing officer. Of course, it is also, as per Nimit Mehta's case, Bombay High Court said that it is the duty of the assessing officer and not your duty. But it is always better that we don't have this sort of situations and we don't have to file writ petitions, because filing writ petitions is time consuming and it is expensive. And the stake has to be worth it. Chote case mein stake nahi hoga to koi matlab nahi. In Pawan Murarka's case, another Bombay High Court decision, the assessing officer at Delhi issued the reopening notice. Right? Petitioner objected, saying that, Baba, I am assessed to tax in Mumbai. Why is a Delhi officer issuing me notice? Now, if we remember that 143(2) has two parts. One, your assessing officer can issue you a notice. Two, prescribed authority can issue 143(2). Prescribed authority is Assistant Commissioner of Income Tax, Circle 111, Delhi. So ये केस में भी ऐसा ही हुआ था. Circle 111 दिल्ली ने रीओपनिंग नोटिस इशू किया. Bombay High Court said nothing doing. You in Delhi may have jurisdiction over 143(2), but you do not have jurisdiction as far as reassessment is concerned. You have no jurisdiction over the assessee. The only person who can issue you a reopening notice is your own jurisdictional officer, and therefore Bombay had to be issued. Now, sometimes what practically also happens, what we have seen is that they will say, okay, transfer this to the assessing officer. If there is time still left to issue a reopening notice, let your officer actually issue you your reopening notice. Ye hota hai. Okay. So please make sure that when you file a writ, you need to know what is the time available to you, and you do your strategy accordingly. Then we come to Ashok Devichan Jain, another again Bombay High Court decision. Here what had happened was that the ITO had no jurisdiction. So accordingly, the assessee challenged the notice saying that I had filed a return of income declaring an income of about 64 lakhs. Therefore, the jurisdiction will not be with the ITO, but it will be with deputy commissioner or assistant commissioner and not the ITO, because my income level is beyond what an ITO will assess. So therefore, this notice is invalid. ITO also admitted that my notice was defective, but again, PAN was lying with me. Bombay High Court said nothing doing. It is a jurisdictional notice, and any inherent defect in that notice is not curable. So therefore, message is, please look at whether your officer has proper jurisdiction or not. Now, interesting decision here, and only one decision, that if there is a notice under 148AB where a certain reason is given, but in your 148AD, right, your subsequent order, the reason is something different. Will that survive or not? And here this decision will help us to say that Delhi High Court held that nothing doing. You must have the same reasons, right? You must do your homework properly. You can't change tracks midway. So that's something which is again important. Your purpose of reassessment can also not be changed. So again, in these two cases, uh, you know, what this is a case of Alok Industries, where what had happened was this company was already under the IBC. It was already under the CRIP process. And the notice was issued to gather information about my erstwhile promoters or certain other people with which I had transactions. And there the Bombay High Court said, no, you can't do that unless there is income which is escaping assessment in my own hands. Then and only then you can issue reassessment notice. Otherwise, you cannot. Moving on, this is a very favorite topic for all of us, right? To say that audit objection hai, reopening notice hai. So what happens in case of notices which are issued on the basis of audit objection? Now, in the Springer Healthcare case, Delhi High Court decision, right, said that there was some information that was flagged in the course of audit objection. So this falls within the definition of information. That is very correct. Okay. But Delhi High Court said again, and we noticed this, that just because there is an audit objection, it cannot act as a command for the assessing officer to issue you a notice under Section 148. Okay? Irrespective of what that information is. High Court said that the term information used in the first proviso prescribes issuance of notice under 148 unless there is information with the AO which suggests that an income chargeable to tax has escaped assessment, you cannot issue a notice under 148. So just because एक audit objection है, just because कुछ लिख दिया, that does not mean that the AO has automatically एक trigger आ गया कि मुझे 148 notice issue करना है. So he was required to take an informed decision as to whether the issue raised has been considered and concluded in the assessment proceedings. The AO could not construe an audit objection as the ground of issuing a notice under 148, regardless of whether the assessee's income had escaped assessment. So therefore, one has to be, mindful of whether the assessing officer has applied his mind or not. Couple of other decisions. Is there a change of opinion, after the audit objection has been received? So look at this case. Two different cases, one in favor of the revenue, one in favor of the assessee. Now, in this Sri Narayana's case, right, Kerala High Court, Honorable Kerala High Court said that after 1/4/2021, your reassessment provisions have dramatically changed from 1/4/22. And audit objection is one of the reasons for reopening the assessment. If the revenue audit raises an objection that the assessment was not completed in accordance with the provisions of the Act, there was some inherent defect in completing the assessment, then it cannot be treated as a change of opinion because that is a statutory prescription and statutory ground for reopening the assessment. The assessing authority has proceeded strictly in accordance with provisions of clause so and so, and therefore writ file was dismissed. Whereas, see what Bombay held. Bombay says that if an assessing officer makes adequate inquiry, if in the original assessment he has done what he had to do, just because you have a audit objection cannot give the authority to the assessing officer to reopen. So again, Delhi is in favor, Bombay is in favor. Kerala has a discordant note, but one would still believe that this proposition holds good, that a audit objection can construe information, but the information should be such that suggests escapement of income. So long as the suggestion of escapement of income is not proved, right, an audit objection cannot form the basis of reopening. Moving on to the next issue. We'll take questions at the end, if that's okay. Moving on to the next issue. If the transaction is not my transaction, right? If I am named in certain transactions of accommodation entries, does it mean that automatically my assessment can be reopened? The answer to that is no. I would believe that, again, this decision very clearly says in GDR financing, and also the other decision in of Delhi High Court for assessment year 1819. Both of these, that look, somebody has to form an independent opinion as to whether your income has escaped assessment or not. Just because you are named in a transaction cannot lead to an automatic belief that your income has escaped assessment. You may have borrowed money from somebody, and that somebody may be an accommodation entry provider. But just because you have borrowed does not mean the fact that this income is escaped assessment. You have taken an entry. That is not what it is. The AO has to have certain proof. Just because somebody confesses in his statement, saying that I am an accommodation entry provider, but he doesn't name you, then you should be in the green. Again, if the AO does not examine a particular transaction in the original assessment routine. So this is Azim Premji Trust. The transaction is before you, right? There the question was, this trust received some shares at a value which allegedly was below the fair market value. And the question was whether the AO should have examined the applicability of section 56 to 7B at that time. The answer to that was, look, the AO has all that he needs to do or know to form an opinion. The fact that he was delinquent in not looking at the applicability of a particular section of the Income Tax Act should not create any kind of permission for him to reopen. So if he would not have, looked at a particular provision, then obviously he should not be regarded to be. So, sorry. Yeah, this is what we saw. This is Azim Premji's decision. Sorry for the slide change. Then let's come to another important thing, what constitutes change of opinion? Because again, even today, change of opinion is relevant. It's not that in the good old days, we had those older decisions, right? Where Kelvinator, where, change of opinion could not result in a reassessment. So is Kelvinator done away with? The answer to that is no. Again, let's look at a few cases. Now in this Siemens case, what happened was that the assessment year was 14-15. 148AB notice was issued. Then 148AD was passed after considering the assessee's submission, and the AO held that the assessee had fully disclosed the information in the return of income and there was no income represented in form of an asset within the meaning of explanation 149, which had escaped the assessment. Thereafter, another 148A notice was issued holding that the assessee had not furnished any documentary evidence. So the assessing officer reopened the matter. There the assessee said, बाबा ये क्या हो रहा है? एक नोटिस आया 148A का जिसमें आपने ऑलरेडी मुझे क्लीन चिट दे दिया, दूसरा नोटिस आप मुझे क्लीन चिट नहीं दे रहे हो. So he went and filed a writ before the Bombay High Court. What the Bombay High Court said is that, look, there was already an order passed where the assessing officer held that there was no fit case for reopening. So therefore, why are you issuing? Another order was passed where the assessing officer was the view that it was a fit case of reopening. तो ये आप क्या कर रहे हो? एक ऑर्डर में आप लिख रहे हो कि एसएससी का कोई रीओपनिंग नहीं हो सकता, दूसरे ऑर्डर में आप लिख रहे हो कि एसएससी का रीओपनिंग होना है. So what is it that you are doing? Assessing officer's explanation is very interesting. Okay. Assessee received a communication dated so and so that has been passed. He said, assessing officer ने क्या कहा? ये तो technical glitch है. I never intended to issue this first order. जहां मैंने clean chit दिया, वो technical glitch से कुछ हो गया, assessee को चला गया. I never intended to issue this order. High Court said, Baba, ये सब नहीं हो सकता, you know. High Court said, you conduct an inquiry against the officer. How can you say this? No, PCCIT को बोला बस ऐसा नहीं हो सकता. You once there is something which is gone on to somebody's portal, that is an official document. अभी उसको, you know, आप उसको recall नहीं कर सकते. We've had an issue, you know, couple of issues where draft orders have been issued. We tell the assessing officer saying that, sir, मुझे DRP में जाना है. He disregards this thing. He comes up with some cock and bull story saying, मैंने email लिखा था saying that I want to go before CIT appeal. So issues final order. Then he realizes, बाबा ये तो गड़बड़ हो गया. He recalls that final order saying, I am recalling the order. ये क्या आप recall कर सकते हो? There is no provision for recalling of an order. But officers do these things. So in this case also, officer was creative, saying that, यार ये मैंने गलती से कर दिया. So sometimes these things happen. But change of opinion will not result into a reassessment. That proposition holds good even today. Now, what constitutes information, right? And this Divya Capital one, we already saw at one point in time. So there was about 1,000 crores that the assessee earned, right? There was a notice under 148 AD saying that this is a private equity AIF fund. So it had earned money on the sale of equity shares. It said, this is not my turnover, this is my income, which I have already distributed to my holders, etc. But still, you know, there was a reopening done. So upon filing writ, right, what High Court held is, new reassessment scheme was introduced with the intent of reducing litigation and to promote the ease of doing business. A progressive as well as futuristic scheme of reassessment whose intent is laudatory and has its implementations has not only been rendered nugatory, but also has the unintended opposite result. The term information in explanation 1 cannot be lightly resorted to so as to reopen assessment. Whether it is information to suggest under amended law or reason to believe under erstwhile law, the benchmark of escapement of income chargeable to tax still remains the primary condition to be satisfied before invoking powers under 147. Merely because the revenue classifies a fact already on record as information may vest it with the power to issue a notice under 148B, but could not certainly vest it with the power to reissue an assessment notice under 148 prior to an order, post an order under 148 AD. So very important part, there is information. That information first has to suggest the escapement of income. Second proposition, that information is okay to start your reassessment proceedings, issue you my first show cause notice under 148AB. But once you pass an order under 148AD, where you give clean sheet or at least you have a certain reasoning, then you cannot issue a 148. So you can start the assessment proceedings, but you cannot continue to perpetrate the same mistake. And this is important because ultimately, what can you do? And sometimes the challenge is that your 148A D order, right? Can you go in writ or not? We'll see some decisions, but it is difficult to go into a writ against a 148A D order. You either challenge the 148AB itself or you challenge the notice under 148 after the 148AD. Because 148AD, becomes a little difficult to challenge by way of a writ. Moving on, see one or two more other cases on what is information, right? Now, this is an important decision, Excel commodity. Here, what had happened was that the department said that I have done fictitious derivative transactions with a particular person. In relation to this, I submitted a detailed reply in 148AD. The officer indirectly accepted my explanation, but alleged that I had taken accommodation entry by way of fund transfer from somebody else. Agreed, I filed a writ petition which was disposed of by a single judge, which remanded back to the assessing officer. Then the assessee approached division bench saying that, look, information cannot be lightly resorted to, as we saw in Divya's case. Okay. There, the High Court said that, look, ultimately, following Divya, this is not something that you can, go on a fishing inquiry, right? So when you say that you have information which suggests that income has escaped assessment on account of one thing, you can't then go and say dusra bhi hai, tisra bhi hai, chautha bhi hai, that is not somewhere permitted. But again, it is important. Now, Matthew Cherian again is on the same principle, which says that information must suggest an escapement of income. It cannot just be information simpliciter. And the last one, right, where it said again, this is Bombay High Court. Bombay High Court again repeated the same proposition to say that, look, आप 148A भी इशू करो ना, 148A भी इशू करने में कोई हर्ज नहीं है, आप 148A भी इशू करो, that is enough. But to carry it over and over again will be a little bit of a challenge. So these are some decisions which I thought I'll leave with you in terms of the what constitutes information. Then what happens if the information is not supplied to me, right? If the department has information, but it holds it in its pocket, does not supply it to me, obviously no reassessment can be done because I have to know what is my fault, right? मेरी गलती क्या है वो तो मुझे पता होना चाहिए. You come and hang me, issue me a notice before supplying me the information. So can this be a reason to quash your reassessment proceedings? High courts have actually said no. The fact that you have not been provided with the reason is not something that will quash your reassessment. All that can happen is that you will be given, high courts will direct the department to give you the information. They will give you a reasonable time to respond to whatever the department has said. But you can't say that मुझे information नहीं मिला, that is why आप notice को quash करो. Those are not something that the high courts have said. So I think in all of these three things, we should just kind of say that at best they will say that I will set aside your notice. Okay. At best, they will say, I will set aside your notice, let the issue, AO issue you a fresh notice. उससे ज्यादा और कुछ नहीं होता है. So from that perspective, one has to be again careful कि हर एक चीज में writ file नहीं होती. Writ file सोच समझ के होती है. Sometimes we are very trigger happy as far as filing writs are concerned. I think again, this is the same thing. So I'm not going to kind of go into this. Again, speaking order का opportunity generally department को दिया जाता है. It's not that they don't give. So supposing the assessing officer issues you a notice, you file a response, but the assessing officer does not consider your response at all and passes the order under 148 AD. तो क्या होता है? So these one or two things, one or two decisions is that if you pass an order without considering the assessee's response and you just reiterate what you said in 148AB in your 148AD order, your assessment order or reassessment 148AD order is, uh, liable to be set aside or quashed. In your second case, there was also a cost of 50,000 rupees, which was levied on the officer. So from that perspective, again, one has to be careful in terms of what exactly you are contending in the writ, right? Next case that we are going to look at is a case where reasons under 148AB and 148AD come to be different. Here again, we have dealt with this, where typically what we saw is that if there is a notice under 148AB on account of some transactions of some bogus purchase or sale of shares taken by it, and therefore there is an order that is passed that this company was not sound as to make this assessment and no source of investment was explained, etc. There, the assessee was never asked all of this. And if you are not asked to prove this, you just said that you give me details of purchase and sale of shares, I believe income has escaped assessment. You give the details of purchase and sale of shares. Then the officer says, no, this company is not sound. ये आपने इसमें इतना 3 crore रुपया क्यों डाला? ये आप नहीं डाल सकते, blah, blah, blah. That cannot be the basis of framing a reassessment in your case. So again, one has to be careful that what should you do, right? And if the assessing officer then issues you a supplementary notice, in this case, the supplementary notice was issued. तो सप्लीमेंट्री नोटिस भी नहीं चलेगा. आपको अगर जो भी एलिगेशन डालना है रीओपनिंग का, वो आप 148AB में डाल दीजिए. देन एंड ओनली देन योर रीओपनिंग कैन हैपन. Decisions where procedures were violation of procedure under 148A. And again, I think this is important. We saw that the procedure in GKN was sacrosanct. And the procedure as far as 148A is concerned is equally sacrosanct. So therefore, everything has to happen by the letter. So first, you have to conduct the inquiry. And I'm talking about the pre-25 this thing. अब inquiry नहीं है, but we are still, reassessment today, we will still deal with 21 to 24 cases largely. 25 के cases, reassessment तो अभी आएंगे उसके बाद. So, we're not dealing with that. But whatever we have decided cases are for 21 to 24, where again, you have to basically carry on the procedure to the T. आप उसको शॉर्टकट नहीं कर सकते. आपको जो भी लिखा है प्रोसीजर में वो सारा करना है. सो देयरफॉर अगेन the 148A procedure is sacrosanct. Inquiry, 148AB, notice, sufficient time given to the assessee, 148AD order, wait for up to 30 days and then pass a 148 or issue a 148 notice. ये sacrosanct है. इसमें शॉर्टकट नहीं चलता. Again, this Alchem Laboratories case again is an interesting one, where there was about 3 crores of capital gains, which was not shown in the ITR properly. So, assessee filed a writ under challenging 148AB notice, which was disposed of by the High Court, which says that 148A requires conduct of an inquiry and information, and therefore it cannot be in abstract. You conduct the inquiry, right? And that the writ is premature. Department said, अभी 148AB के सामने क्यों writ file किया? आने दो ना, 148AD होने दो. Let the reasons come on record. There, the High Court said that the decision to issue the reassessment notice for 148 attains finality after the passing of 148 AD order, which cannot be revisited by the revenue. So therefore, considering the nature of information furnished, the High Court quashed and set aside notice under 148 AB. Again, we'll have to see each and every case ka facts before we go there. But at least there is something where we can take shelter from to say that even under 148 AB, we can challenge the notices. Second one is, I think, again, more or less the similar one. So let me not deal with that. Then let's come to the next issue, where 148AB ka hi hai. So we already kind of dealt with that. So I'm not going to take too much time on that one also. Right? That 148AB generally writ one may not entertain. In this one that we saw, exceptional case, 148AB was missing. There are certain decisions where the High Court, of course, refused to interfere in the proceedings. So it doesn't go always the assessee's way. And it's important for us to understand where this go against the assessee also. Now take this first case, right? That there was a supplier of this company who gave a testimony that he had not carried out any transaction with this company at all, which were appearing in his bank account of a prima facie case. And a reopening notice was issued. Then the High Court said nothing doing. तुम्हारे बैंक अकाउंट में है, तुम दिख रहे हो, तो I will not interfere. Dandapani, where the assessee challenged the reassessment proceedings on the ground that the department had committed an error in wrongly recording cash deposits at 169921 lakhs instead of 1699.21 lakhs. इसमें भी बोलता है ये क्या, you're nitpicking, right? Decimal point है, उसने वो भूल गया, उसके लिए आप बोल रहे हो ये information ठीक नहीं है. So that is not where we will not interfere. Seema Gupta's case, where this was a case of long-term capital gains, and somebody was providing the long-term capital gains entry. Again, these were disputed facts, so therefore, High Court said, I will not entertain writ jurisdiction. Again, some of these are, really fact-based cases. Just the last one, right? Assessee said that my address is different, but the notice was served on the address which was given in the PAN database. A time of 7 days was also given to the assessee to respond. So therefore, from that perspective, the High Court said, no, we will not interfere in these situations. How much time do I have? 6 o'clock already. 15 minutes? All right. Thank you. So in this Jagannathan Bharat's case, right, the issue was my portal was not working. So I could not submit an online response. I submitted a physical response by way of writing an email to the AO. Question was, is that a valid response to your notice or not? The answer to that was, yes, it is a valid response. Ultimately, it is something which has been mailed, it is on the record. Just because it is not on my portal, that does not mean this thing. So the AO said, please consider, the High Court said to the AO, please consider this response and, take the case up on merits. Now, sometimes we get notices where we get less than 7 days to respond. Right? What is the fate of those notices? High courts have consistently taken a position that there has to be a minimum 7-day time limit given to the assessee to respond to those notices. Otherwise, this notices would be, and you give extended time, right? So again, one has to remember that if you're not given sufficient time, right, then you have to be given sufficient time. High courts usually give you the time to respond. So again, those are decisions on that. information basis Ashish Agarwal decision was not provided. So obviously Ashish Agarwal said that, if you are reissuing those notices under the new regime, you have to follow 148A procedure, AB procedure, whatever information you have, you provide to the assessee. And if you do not provide this information to the assessee, then obviously, the notices had to be quashed. If there is still time limit left for you to issue a fresh notice along with the information, then you can do so. But if your time limit is gone, then you cannot issue a fresh notice. That is what the majority of the high courts have held as far as this issue is concerned. Now, again, this is a very common problem in all of us faces. What happens if the communication is sent to your incorrect address or incorrect email ID? Principle that is most important is that the email ID which is there on the department's record, if the notices are sent to that email ID, there should be no problem. Okay? Even though you may have the person not working for you. So you can plead reasonable cause to say that I was not given, but that cannot invalidate your reassessment notice. Saying that, okay, I may be given more time, court will give you more time. But they cannot invalidate your this thing provided the email address is on record. So you please have to update your record properly. Good part is that both your primary and secondary email ID have to be sent those notices. And the procedure of sending real-time alert also has to be followed. So you must get your SMS alert and you must get your notice on your primary and your secondary email ID. Look at this last case of Manas, very interesting case. This Manas fellow, right, had an email ID called jvgsurana@gmail.com, to which the AO sent a notice, which was not responded to by the assessee. Why? He said that my return had a email ID called jygjsurana@yhoo.co.in. So this was my email ID in the return. I, by mistake, did not add the A, Yahoo. So therefore, this notice didn't go, Gmail also didn't go. But in his return, he himself had given the address ID. And therefore, if this A is not added or it is sent to a gmail.com instead of yahoo.com, Bombay High Court said nothing doing. All of this is all you're just taking, too much liberties with us. This notice has to be valid. So one has to be careful in terms of what has happened. You will never know what a judge will actually look at and what a judge will not look at. Proposition still remains true that if your notice is issued to an incorrect email ID, that notice is not deemed to be issued to you, right? Not deemed to be served to you. No SMS alert, no real-time alert, nothing. So, but point remains that you have to be extremely careful in terms of what you say to the court and how you put it. 50 lakh threshold for reopening for 10 years. What is the threshold? Is it transaction value or is it income? In all of these cases, the courts have consistently said that my income has to be more than 50 lakhs. My transaction value can be whatever. So if I have a transaction of sale of property, for example, which I do not disclose, right? Then those transactions, from the sale of property, even if they are more than 50 lakhs, but the gain is not more than 50 lakhs, then the 10-year limit does not apply to me. So it is important that one has to see. Again, in this first case, this is something that we found that the matter was actually listed again, but we never were able to find what happened. But the principle is still there in all of these things, that the income has to be more than 50 lakhs, not the transaction value. come to approval and sanction, which is very important. And this again, there are a lot of decisions which actually quash your reassessment because the incorrect authority has approved it. So please be very careful and ask for who has approved it and how the approval has been taken. Even if the approval is mechanically taken, then your notice could be considered to be invalid. So in this Vikas Gupta's case, there was an approval, but there was no sign on that approval. He just uploaded an unsigned approval. So if there was an unsigned approval, then obviously there is no application of mine, and therefore nothing doing. You can't have an unsigned approval that was updated. In JM's case, the approval was actually taken from a lower authority, right? Additional CIT, and not the PCCIT or the CIT. So again, the notices were quashed. And same thing is followed in this Voltas and Silvesia. Now, in Bhavesh Dharod's case, okay, PCIT actually granted the approval on the basis of form submitted, where it was stated that the time limit for the proceedings was covered under 149(1)(b) and the quantum of income was 4 lakhs. Since the notice of 148(a)(b) was issued in 3 years time limit, the proceeding shall be covered under 149(1)(a). Therefore, no notice could have been issued for an amount of less under 149(1)(b), and it could only be granted by PCCIT. So the PCIT grant of approval was without mechanically done. So you have to be very clear on who is your approval, what is your time limit. Within 4 years, if there is a particular amount, if the higher authority has to give the approval, the higher authority must give the approval. The lower authority giving the approval, wo nahi chalta. And believe me, in many cases I have seen this is where the department actually falters. So one has to be careful. In Vodafone, again, this was after 3 years, and the principal chief commissioner's approval was required. Again, the chief commissioner had given the approval, so that was also not regarded to be a valid approval. So many cases, again, I have put down many different cases which will help you in terms of seeing who has to approve at what point in time. So only one important point on this, that which is the date on which you look at what it is, whose approval is to be required. So as on the date of the issue of the notice, what is the law you have to see, and who under that law has to approve is something that you have to see. That is what was held in Siemens's case. So you have to be careful that you have to look at the law, the position as on the date of issue of the notice, not on the first day of your assessment year. So as on, because these are procedural sections, right? As on the date of issue of your notice, who has to approve is something that you have to see. So this is what was held in Siemens case. And of course, there's no relating back as far as Tola is concerned. There's one argument which was, given by the department saying that, no, you have to look at because this was a Tola case, you have to look at the old law. Answer is no. You have to look at sanction under new law only if the period is after 1/4/2021. So you have to look at the sanction on the date of issue. Non-existing entity, again, proposition is valid that issue of notice in the name of a non-existent entity is void. But it is important that the assessee actually intimates the assessing officer about the non-existence of that particular entity, right? Because I would believe that unless you intimate, the officer is not going to know. And then once you do not intimate, then the assessing officer will take the defense that I was not intimate. Your PAN being active or inactive does not matter, in my view, right? Even though you may have intimated the officer, your PAN is still active, department cannot take the position that the PAN is still active. And that's one of this case in Delta Electronics. And the name of the entity is important. If you give the wrong name, that is also, notice issued in the name of a wrong entity. If a wrong name is mentioned by mistake, that notice is also invalid. So Shakespeare saying what is in a name after all does not hold good as far as income tax proceedings are concerned. Again, I think, only point that I would want to see is that carefully choose your writ in terms of even these non-existing entities, because courts are very, very wary about granting you relief in all of this. You have to follow all your procedures to the T as far as intimation is concerned. Of course, there are some decisions on alternate remedy which I am not taking. If there's an alternate remedy possible, courts are very, very, wary of dropping reassessment. Some decisions where reopening was upheld, I'll just take one or two decisions that sometimes it's not always that the courts will give you a decision in terms of, quashing your reopening. So where a reopening notice was issued on the ground that information was received and the assessee was beneficiary of an accommodation entry in terms of long-term capital gains. Since the sale and purchase transactions were admitted by the assessee saying, I have done this, then courts refuse to interfere. So sometimes, or even if I elect not to furnish the information that the AO asks, then courts are reluctant to interfere. If I don't place on record any document in for support of my claim, then courts are reluctant to interfere. So from that perspective, I would think that fully be sure of what you want to do, and then and only then courts will decline to interfere. Verification of notice, I am not getting into. Notice had to be verified. FAO JAO controversy, I am not getting into in case of international tax and central charges. Who has to issue the notice? Matter is sub judice in the case of Exaware, right? Bombay High Court has said that only the faceless officer can issue you a reopening notice. Even in the case of international tax and central charges, matter is pending. There are other high courts which have held differently. Delhi has held differently. Madras has held differently. But matter is going to come up on 15th July before the Supreme Court in Dr. Reddy's case. So therefore, we will, hear from this. So we are not getting into this very quickly. I am not getting into such assessment. Very quickly, just the last slide on the provisions of the income tax bill. Now, there are not too many major changes as far as the income tax bill is concerned. Only one thing that is very important is that explanation today to 147A provides that the AO can assess or reassess all the income that come to his notice subsequently in the course of reassessment proceedings, even if 148A procedure is not followed. 279(2) of the bill expands the scope by validating, saying that even if you don't issue the corresponding notice under section 250 or clause 250, which is pari materia to 148A, still a reassessment has been done. The others are very cosmetic changes. With that, let me thank all of you and take a couple of questions if, anybody has. Thank you very much. Okay. So I'll sit down and then take the questions. Thank you.
Anish, excellent presentation as always. Thank you. One quick question. In your experience, have you seen instances where whether a partnership firm, AOP, or a corporate has intimated change in email address and primary as well as secondary, and yet the revenue goes by the old record and issues notices? In such cases, what should the SSE do?
Sir, in that case, if you have already intimated the AO and you have the acknowledgement of that intimation, then you can certainly approach the court and say that the address is not valid.
Maybe we can take one more question. Anybody? Or should we conclude? So yes.
Past 6, so I think everybody should be let to go home.
So, sir, it gives me immense pleasure, honor, and privilege for me and at WIRC to propose a well-deserved vote of thanks for today's session and for DTRC. Sir, it was wonderful and brilliant session on reassessment procedure and your deep understanding on subject and making us understand the law and practice with case studies has added immense value to all of us. I request all of you to carry a loud applause for our today's speaker, respected CA Anish Thacker, sir. So, friends, with this, we also extend sincere gratitude to all our 8 session speakers for their valuable time and delivering fantastic sessions and raising the bar of our direct tax refresher course. Firstly, CA Bhavesh Dedia for key transfer pricing issues, CA Dr. Girish Ahuja for new income tax bill, Vishal Gada on mergers and acquisitions, Yogesh Thar sir on capital gain, Nihar sir on charitable trust, Advocate Sagar Tilak on Benami law and Income Tax Act, Dr. CM Sunil Motiwala on important IT-80 High Court and Supreme Court judgments, and of course, CA Anish Thacker sir for reassessment procedures. So I request once again to carry a loud applause for all the 8 brilliant speakers. I also extend a sincere thanks to our Direct Tax Committee under the visionary chairmanship of CA Ketan Sayya sir for carving out wonderful DTRC program. Yogi Sabhagra team for seamless arrangements. Catering team for serving us delicious food. WRC staff for working round the clock. Last but not the least, I thank each one of you for participating in DTRC, the one who have attended physically and the one who have attended virtually. We are looking forward for your active participation in upcoming WRC activities, the details of which are there on WRC website. Thank you once again. Thank you. Looking forward.